Welcome back to the Property Frontline. Today I'm here again with Scott Hochgesang for our Market Watch series. Hello, Scott.
Hello, Deborah. Hello, everyone.
Today we're covering off a greatly anticipated report, at least by Scott and me. We're covering off Louis Christopher's boom bust report for 2025. So this is where Louis, from his company SQM Research, he draws upon a wide range of data to make forecasts for where property prices will head in the Australian property market in 2025. We will cover off those forecasts. We'll also discuss the key influences that Louis has drawn upon to make his forecast. We've also got a couple of extras to add. And then we'll wrap up by looking at not only Louis' forecast, but also a couple of the major banks. And we'll give you, as usual, a few of our tips and hints for how you can use the information in a practical way. So let's get started.
On to the crystal balling. Here we go.
Oh, yeah. I love this time of year for forecast season. It just is so exciting. Okay. Can you see?
Yes, I can see it very well.
Okay, lovely. Alrighty, so let's get started. So Scott, would you like to take us through this chart, please? You might need to give us a little bit of background.
Sure. Look, sort of going into the forecast, we thought we'd actually go back in time and just take a look at what SQM's forecasts have looked like for the past 2 years, just sort of taking a look at those versus some actuals from other providers. Just to give us sort of some context here. So we've got a chart that has the 2023 dwelling price forecasts that Louis made back at the time, comparing it to CoreLogic's actual house price increases for the year. So back in 2023, he had Perth sort of pretty low, growing at 4 to 8%. And that boom was really sort of taking off. The house market went up 15.6% there. Brisbane, he had growing 1 to 5, was up 13. I'll just kind of jump down to Adelaide because it's another one like that. Had it 0 to 5, up 8. Sydney, he had it growing for 5 to 9, came in plus 12. So a little bit of underestimation, I think, probably coming out of COVID. Directionally, all of those markets were correct. I think he just didn't see quite the rate of growth that we were going to hit.
Yeah, maybe conservative. Oh.
Yep. Melbourne's pretty well spot on. Darwin looking fine. Hobart fine. Canberra pretty on. And you can see it in kind of the capital city numbers. Really nationwide, he was really not projecting a lot of growth. And when we look at those nationwide house price forecasts, the national number was up 8.6%, and the capital cities were up 10. So just a little conservative. And it looks like we've got 2024 here. Deborah, do you want to sort of take us through those?
Yeah, so to set the scene, so this column here shows the SQM forecast, which would have been made in November of 2023 for the year of 2024, which we're currently still living through. And then this column here has got the CoreLogic actuals. So these are the actual performance numbers for the Australian property market up to the 31st of October 2024. So it's like 10 months of the year now. So
sorry, Deborah. It actually is 12. It's the 12 months ending October 30th.
Oh, okay, because you did the numbers. So what? So you did from 1 November.
There are 2 months of 2023 in that number, but it is a trailing 12 months. So best to kind of compare a year to a year.
Good on you. Good job. Who prepared the numbers? All right. So how did Louis go with his forecast? So once again, with Perth, he was a bit more conservative with his base case, and Perth has shot the lights out, going up to 22% of an increase. Brisbane, Louis said 4 to 8. It did increased by nearly 12. Darwin, he was pretty spot on there. Melbourne, very interesting that he was probably the only forecaster that was anywhere near getting Melbourne right, which is so true for this guy. That's why we like him so much, is that he is the most reliable forecaster in the Australian market that I have seen, at least for probably the last 7 years. And the other reason we really, really like him is because he's unbiased. So at least from what we know, he's not being paid by developers to, fudge the numbers. But anyway, back to the numbers here. So he forecast Sydney to do a bit of a contraction, which he would say we're starting to see now. But to date, still up by 4%. Adelaide, he really, didn't see that one coming. It's, and I would say that's caused by an influence of what happened with the land tax legislation in Victoria, caused a lot of people to buy in Adelaide, blah, blah, blah. Right, so Hobart, he forecast a bit more of a drastic downturn. It only went down by about 2. Then Canberra, -8 to -4, and it was up by 1.5%. Capital cities generally, he was forecasting not much movement at all, and because of these big jumps of Perth, Brisbane and Adelaide, it's meant that the capital city's performance overall has, been quite robust, and CoreLogic has said nationally, things have been interesting. Right. And so on to what Louis Christopher forecasts for 2025. Now, the really interesting thing about this forecasting method is that Louis is one of the few forecasters to actually use very broad-based scenario planning. So we get a couple of different versions of his forecast. He was one of the innovators of doing this for the property market forecasts, in that he will recognise that there's other drivers that will influence pricing other than interest rates. What I really, really remember from the 2023 forecast, the big banks didn't even factor in migration to their forecasts. And it, of course, was something that just blew the pricing out of the water. So from a scenario perspective, for Louis' base case, he's forecasting that, or he's planning that the RBA will drop their interest rates by 25 to 50 basis points around mid-25. He's working on the assumption that population growth will continue at around about 500,000 plus, and that there'll be no inflationary outbreak. For scenario 2, he is saying that there's no rate cut in 2025, population growth will continue, and no jump in inflation. Then for his third third scenario, he's saying that there'll be a rate cut in March with population growth still strong. And then the final scenario, as long as my voice holds, is he's saying population growth falls to less than 400,000, no rate cut, and commodity prices remain stable. Scott, over to you.
Excellent. Just a note on scenario 3. We call that the giddy up scenario. That's when all factors are going all cylinders, rate cuts, population growth, and I believe he's got really no increase in building approvals in that scenario either. So just a very ambitious, rosy scenario. It's not what he's expecting, but I think it's good to kind of see that on there. And those of us in the business, obviously we've got clients who have been buying and are buying. We're sort of always hopeful that that's going to be the case for people who have bought. But just to do kind of a drill into the numbers themselves, we're going to just focus on the base case here.
Before you do that, didn't he used to have like a Goldilocks one where everything was perfect? Doesn't look like he's used.
That kind of is Goldilocks, I think.
Oh, is
I think
it?
that is a bit Goldilocks.
Yeah, just right.
Yeah, Goldilocks is giddy up. Yeah. Okay, so onto the base case scenario. Let's just run through some numbers here, and I'll make a few comments about the various markets. So his base case growth rate for Perth, this time he's sort of switching. We're switching around versus the last 2 years. We're going full on that Perth's going to continue with this very aggressive growth we've seen. He's projecting the market could grow at 14 to 19%. Just a couple of notes. We, of course, don't want to share everything from his report because we want everybody to go out and buy it because Louis and his team need to eat as well. But there are some interesting notes in there about large government surplus for the state, $44 billion of infrastructure spending occurring, and a very low vacancy rate. So there's just kind of lots of color behind these numbers that you get when you actually get this full copy of the report.
And he does also go into the suburb levels as well in the boom bust report. So it's worthwhile buying.
He does some ratings on suburbs. We'll leave it at that and let everybody sort of dig through all of those at kind of their leisure. Brisbane, +9 to +14%. So he's quite aggressive on Brisbane as well. Listings are down quite a bit in that market. The one note I did pick out of his commentary was that rental growth is slowing there. And I don't think it's necessarily a bad sign for the market just as much as there's been so much increase in rents up in that Queensland market. It's going to have to be a period for that to be digested a bit. Moving down to Darwin, pretty positive on that, +5 to +8%. I don't really have a whole lot to say on Darwin, just really haven't spent much time looking at that market. One of our smaller capital cities. Now on to the big two, Melbourne and Sydney, and these are the headlines we've seen all across the media. Falls expected in Melbourne and Sydney. So he thinks his base case scenario is both markets are going to fall anywhere between 1% and 5%. And really what we can see from his thinking is that the markets are both falling now. Melbourne has its own set of circumstances different from Sydney. These high interest rates are really just sort of starting to bite at the moment. And it's not until we get that future rate cut that I think he really thinks the markets will stabilize and return to growth. So whenever you think that rate cut's going to occur has a very large effect on what the growth rates will look like for that market. And just down to Adelaide, +8 to 13. So there's no flat growth for that market. It joins Brisbane and Perth as the three kind of more commodity, smaller markets that are expecting good growth for 2025.
Yeah.
Hobart, pretty flat, -3 to +2. So kind of not a lot going there, but it did have years and years of growth for a very long time. So it's still in its digestion phase.
Yeah.
And Canberra, it's pretty wide scenario there. It could fall 6 or it could go up 2. Leading us to an average of the capital cities of a growth rate of 1 to 4%.
Yeah. Okay. All right. So let's talk about the scenarios then, because there is a lot of things that are going to happen in 2025 that we know about. So I thought one of the more interesting and controversial assumptions that Louis made was that he was kind of banking on the Liberals winning and Labor losing the federal election. Your thoughts on that?
Well, I won't make any predictions on politics based on my previous predictions in the U.S. But I don't really know if a change of government is going to have a radical effect on policies, at least in 2025. So I think it's a government may change and they'll start putting their policies in place, and that would start affecting the outcomes in 2026.
Yeah. Yeah, okay. So I agree that will probably have minimal effect. Where it had a huge effect was, I think it was the 2019 election, when Bill Shorten was saying, I'm going to cut negative gearing, and he didn't get in. Then the Libs got in. I remember I was at an auction like that weekend, and it was like everybody turned up. Everyone was like buying after, like giving property a wide berth. It was crazy and immediate. But it's definitely going to be the 2025 election, which we think might be February, March. That is going to have or one of the key platforms of that election will be the housing policies. And really, we've just got a summary here. We're bound to hear so much more about it in the next couple of months. But yeah, so the differences, Labor, they've just got their help to buy legislation or, platform through. But in reality, that new change is only going to help 10,000 buyers. It's there to help people, which is great, but will it have a huge impact on prices for 2025, given that only 10,000 people can access this assistance versus like the between 400,000 to 500,000 sales that occur every year? Maybe not going to be a big change. But the difference with the Liberals is that they're really working on pulling a lot of levers to free up access to funds. I know you have an opinion on how strong or risky we should make loans, but anyway, let's not go there. We can talk about that another time. And also the Libs have really got a big focus on putting a lot of money into infrastructure to increase supply, which is what we in the industry really know is what will solve this issue of unaffordability, and we just simply need more houses. The other thing that Louis, as you could see in his scenarios, he was very pronounced about the impact of migration on the Australian property market. And so I agree. I mean, if the Libs keep the doors open, it's just going to make things tougher. And they have to be more selective about, getting the right people in. We were listening to Michael Zucker's press conference from yesterday, so the 26th of November, where he said that in the last 12 months, the Labor government had only let 9 bricklayers come in. And we need a lot more of those.
We need a lot of tradies. Yes, exactly. They should be prioritized to get them in.
Yeah. And so he's hoping they focus migration on helping to increase dwelling supply. And Scott, do you want to talk about this other point here?
I think just a note on these forecasts, they are kind of quite short term. We're looking at growth over the next year or so. And really, we do want to be thinking longer term than this. Not too many of us are going to be buying properties and flipping them in a year and trying to capture a quick gain. I mean, there may be some developers out there. but the vast majority of us are medium to long-term holds. That means we're looking at time periods of 5 years plus, maybe even 10 years. So just a little bit of caution that I see many people asking what market I should buy in right now. But just looking at what the growth forecasts are for this coming year, really just one of the factors you need to be looking at. We want to be looking at growth markets with many growth drivers over a longer period of time. And that leads back to probably a discussion around suburbs and parts of cities, right, Deborah?
Correct. Did you want to cover that, or will I?
No, that one's you.
Oh, okay. Alrighty. So, of course, the point there with this is to make sense of forecasts. What the banks and SQM research have done is group many suburbs into a couple of different categories. So what have they got there? Like 9 or something. But remember, even in places like, well, not even in, but remember, places like Sydney have many, many suburbs. So Sydney in the greater region has 658 suburbs. Each of those suburbs is a separate market, and within each of those markets, there's different speeds for each suburb. So, for example, 2-bedroom units over 4-bedroom houses, they perform differently within each suburb. So while the forecasters are trying to give us a little bit of a bird's eye view of what might happen, there's still so much influence that you can have on your property purchases by being selective about what you're buying and knowing the data at a more granular level. Anything you want to add to that?
No, that was great. And
Okay.
having somebody out there doing that on a day-to-day basis and having hundreds of property observations, to kind of look at, it's just a lot of knowledge base to, to help come to those conclusions. It goes well beyond looking at the data charts and numbers and making decisions the way some of our more data-focused property people are.
Chunky people are.
Or let's just call them highly data-driven, maybe too data-driven sometimes.
Yeah, because there's so much more to property than just data. I mean, and yeah, that's where the nuance comes in. But let's not go down that rabbit hole. Alrighty, so let's take a look. Let's step back out to that higher level. And Scott, would you like to take us through this chart?
Sure. We actually pulled some other forecasts together. So these were done by major banks prior to Louis' report dropping. And one thing we will note is that it seems like a lot of forecasters are actually waiting every year for the SQM report to drop. So we'll see more going forward. But these two had to stick their neck out and put some numbers out prior to that. And NAB and ANZ, two of our larger banks, they are less bullish on Perth, growing at 7 and 8%, they think. Less bullish on Brisbane, 5 to 6%. Adelaide, one of them is about the same as Louis, 7.9 versus 8. ANZ slightly more conservative. And then with Sydney and Melbourne, there's sort of a clear difference here, I think. I mean, the banks sort of seem to be saying business as normal, nothing really to see here. We're going to just keep seeing growth. And I think that's where we're seeing quite a difference in the SQM forecasts, where they're seeing live reports come in from all the data that they collect. They can see small price declines occurring in both markets, and they are expecting that to continue through the year. Yeah, it'll be kind of interesting, I think, as this is all kind of digested by the markets and the many forecasters out there as another data point to be coming out with some of their own numbers in the coming month.
Yeah. And so we'll do a follow-up in January where we'll be able to do more compare and contrast between what some of the banks are saying, because the other interesting point is that even though the RBA is holding back on their rate cuts or any change in the cash rate, the banks are really starting to cave due to, competition in the area. And so there are some good mortgage deals at the moment.
Yeah. Yeah, just to touch on that point, I did not see that mentioned in Louis' report, that effectively, if the banks are all cutting their rates out of cycle, it starts looking like we're getting a rate cut sooner. I mean, it's not an RBA rate cut, but it is an effective cut to investors and home buyers, and one could kind of argue that means we're more toward Goldilocks. We'll see what happens, I guess, through the holidays, because a lot of banks are doing promotions, knowing people are going to be spending a lot of time online looking at Black Friday offers.
Yeah, and apparently Boxing Day is a big property search day, I've heard. But anyway. Alrighty, well, that does us for the moment. So thank you very much for listening to us. Next time on Market Watch, we'll be back to our usual of covering of the property market performance, and we will be doing the data to 30th of November 2024. We'll also be discussing the pros and cons of the wide range of government schemes, whether it is better to use them, whether it isn't. So tune in for that one. Now, if you would like to be notified of when new episodes are available, make sure you subscribe. And if you would like some help with your next property purchase or even a portfolio review, you can speak to Scott or me and contact us via our contact details, which will be in the description below. Alrighty, so better stop sharing. So that's it for us. So Great. Thank you very much, and we'll see you next time.
Goodbye, everyone. Enjoy the heat.
Until the storm comes through.
Yeah.